Welcome back to Investing Talk Podcast. We are zeroing in on a company today that's really been through quite a transformation recently, shifting from basically a clinical stage research company to, well, a commercially validated biotech platform. Today, we're focusing on Arcturus Therapeutics. We've looked at analyst reports, dug into the latest clinical data, and sort of pulled together what the market's thinking lately to answer one core question from one of you, our listener. Is Arcturus Therapeutics a good time to buy right now?
Yeah, it's a great question and really timely. Arcturus has definitely grabbed attention because they're right at that inflection point, moving out of that pure R&D phase, which can feel very speculative, and into actually generating revenue commercially. Now, that stage is obviously full of opportunity, but it also means every financial update, every piece of clinical news carries a lot more weight, more volatility. So our goal here is to connect that, technological potential with the practical investment reality you're looking at right now.
Absolutely. And before we really unpack this whole story, if you find value in this kind of analysis, please do take a moment to subscribe, like, and comment. And hey, if there's a specific company you want us to put under the microscope next time, just leave us a comment below. Okay, let's jump right in. Let's talk about the catalyst that really pushed Arcturus back into the spotlight. It really starts with a commercial win, right? That proof of concept they needed after years of R&D spend. I'm talking about the successful commercial launch of their COVID-19 vaccine. So back in September 2025, their partner in Japan, Meiji Seika Pharma, launched KOSTAIVI. Now, this isn't just another COVID shot. This is actually the world's first approved self-amplifying mRNA vaccine. It's the mRNA. The fact it targets Omicron sublineage is good, but the real story is the tech. It proves the whole platform works commercially globally.
That's exactly it. It's platform validation, not just a product launch. And the market, well, it picked up on this pretty quickly. We saw that reflected in the Q2 2025 earnings beat they reported back in August. Revenue came in at $28.3 million. EPS was negative $0.34. Still negative, yes, but those numbers were way above what analysts expected.
Right. And that beat matters because
it signals execution. Think about it. When a biotech that's mostly known for burning cash in trials suddenly beats on revenue, it tells investors, okay, management can actually deliver. They can build partnerships. They can commercialize. It's about competency.
Okay, so the execution piece is key. And that positive feeling showed up in market sentiment too, right? As of late September, you had, 8 analysts covering the stock with a consensus buy rating. That's pretty strong for this sector, given all the inherent risks. And you saw the big money following that thinking too. In July and August, you had major players like Deutsche Bank, Two Sigma increasing their positions. Noticeably, when those kinds of sophisticated investors start building bigger stakes, it suggests they're seeing more than just a short-term bump. They're betting on the long-term structural potential of the underlying tech.
Exactly. Which brings us nicely to the next piece, the fundamentals. Okay, they've got momentum, but do they have the financial stability and that technological moat to sustain this long term? Financially, well, as of mid-2025, they reported $253.4 million in cash, cash equivalents, and restricted cash. That's a pretty solid number. What's even more important, maybe, is that this cash, plus the big collaboration payments, remember that $200 million up front they got from CSL Seqirus, that extends their cash runway out into 2028. For a biotech, having that kind of runway, maybe 3 years or so, is vital. It means they can keep the R&D going without constantly needing to raise more money, potentially diluting shareholders.
Okay, into 2028. That sounds great, especially for a company working on really cutting-edge stuff. But let's be real, those breakthroughs cost a fortune. Isn't that cash runway just, kicking the can down the road, given the burn rate needed for big phase 3 trials and maybe global expansion? We have to look at the other side, too.
You absolutely do. That's the crucial counterpoint. Yes, the cash balance is strong, but they are carrying a significant cumulative deficit. We're talking $472.1 million, and they're still reporting a net loss. It was $9.2 million in Q2. Now, that deficit really is the historical cost of building their main asset, that proprietary mRNA lunar delivery technology platform.
Okay. So that past spending built the moat they have today. Let's talk about that moat then. We keep saying mRNA. Why is this lunar delivery tech potentially a game changer compared to, say, the traditional mRNA we know from Moderna or Pfizer?
Right. The key difference is that self-amplifying part. Traditional mRNA vaccines, they deliver the instructions, the cell makes the protein, and that's kind of it. Each mRNA molecule leads to a certain amount of protein. With mRNA, the RNA they deliver actually includes instructions for the cell to make more copies of the RNA vaccine itself. So after it's administered, the cell becomes a little vaccine factory for a bit.
Okay, so it makes copies of itself inside the cell.
Exactly, and the potential impact is pretty huge. You might need much lower doses, which simplifies manufacturing, potentially lowers costs. It could also lead to maybe a stronger or longer-lasting immune response, maybe fewer side effects, we'll see. And crucially, remember, Kostaive is the first approved, say, mRNA vaccine globally. That first mover advantage in this next-gen tech really does set them apart. It could give them a lead of several years.
That position is really interesting. It suggests they're not just playing catch-up, but trying to leapfrog to the next generation of vaccine tech. Okay, so beyond the COVID success story, what else is in the pipeline? Because that's where the real long-term value has to come from.
Yeah, the pipeline is pretty focused, strategically targeting high-value rare diseases where sometimes the regulatory path can be a bit clearer if there's a really high unmet need. Two key programs stand out right now. First, there's cystic fibrosis. The program is ARCT-032. They expect to finish enrollment for the phase 2 trial by the end of this year, 2025. CF is obviously a huge challenge. If they can successfully use their lunar platform here, it would be a massive validation for applying it to rare genetic diseases.
And the second key one.
That's for OTC deficiency, ARCT-810. It's a severe metabolic disorder. For that one, they're hoping to get alignment with regulators like the FDA and EMA on the design for a phase 3 trial by the first half of 2026.
And getting that alignment is a big step, right? It means everyone's on the same page about the final big trial needed for approval.
Precisely. It significantly de-risks the path forward. And don't forget, they have those partnerships, like with CSL Seqirus and the Japanese JV Arcturus, providing manufacturing and commercial muscle. So they aren't trying to build everything from scratch.
Okay, let's shift gears now to the immediate future, the next 3 months or so. For our listener trying to figure out if now is the time, this period looks like it could bring, well, a lot of movement. Potential volatility, but also maybe a chance for the stock to get re-rated. The biggest event coming up has to be the Q3 2025 earnings report. That's expected in October. Investors are going to be laser focused on that top-line growth. They need to see real proof that the Kostaive launch in Japan is actually turning into scaled, measurable revenue. It's kind of the first big test of their commercial engine.
Definitely. And beyond just the company's own numbers, there are other things that can move the stock. You've got technical factors like the ETF quarterly rebalancing around October 15th that can force big funds to buy or sell just based on index rules, regardless of fundamentals.
Right, mechanical buying or selling.
Yeah. And then in November, we get the next round of institutional position updates, the 13F filings. That's when we see who's been buying or selling. If we see those big names like Two Sigma and Deutsche Bank continuing to build positions, that obviously reinforces confidence. It shows the smart money is still betting on them.
And the clinical news flow doesn't stop either. There are a couple of dates to watch. First, there's a regulatory clinical holiday data release scheduled for November 20th. Not entirely sure what that entails, but it's on the calendar. And maybe more importantly, that presentation of the phase 2 interim data for the cystic fibrosis program, ARCT-032. That was expected sometime in September. Any positive news from either of those could really move the needle.
And we should probably also mention the speculative side of things. You always get chatter around promising biotechs after the Japan launch. You hear talk about, oh, are they going to expand into other Asia-Pacific markets soon? Pure speculation right now, but it shows the market's thinking about scalability.
Right. And the speculation that always seems to follow Arcturus relates to the lunar technology itself. That constant buzz about potentially licensing out the platform to bigger pharma companies who maybe don't have their own advanced mRNA tech. I mean, that would bring in a lot of cash without selling more stock.
Huge amounts, potentially. And then there's the loudest whisper, maybe, acquisition interest. You've seen some recent analyst notes hinting that major vaccine players might be looking at Arcturus, trying to buy that first mover advantage in SAN mRNA. Again, it's speculation, but given their unique tech position, it's not totally out of left field.
Okay, so let's pull all this together. Let's try to answer that core question. Is now a good time to buy Arcturus Therapeutics? Based on everything we've discussed, the momentum, the tech, the finances, the risks, our sort of overall take lands it in that high conviction but also high volatility space. Let's say maybe a 6.5 out of 10, leaning positive but with serious caveats. Let's break down the pros first.
Sure. The bull case, it really stands on a few legs. First, that pipeline. It's solid, and you've got these near-term data points coming up for CF, flu, and that OTC regulatory alignment, news flow potential. Second, the Kostaive launch was successful commercially, and the partnership momentum, especially with CSL, is strong. That CSL cash really de-risks things quite a bit. And third, you've got that institutional confidence we talked about, the big funds buying in. Plus, insider confidence, remember, the CFO bought shares, about 1,200 of them, back in August at around $16.56.
Yeah, management buying is always a positive sign.
It suggests they believe in the direction things are heading, right near the current price.
Okay, but it's definitely not a slam dunk. There are significant risks here, and this is where that rating gets tempered. Risk number one is just classic biotech risk, clinical trial risk. Those trials for ARCT 032 and CF and ARCT 810 and OTC need to work out. A failure or even a major delay would hit the stock hard, regardless of how much cash they have. Risk number two is financial. It's a concentration risk. Right now, they rely heavily on those big collaboration payments and milestones, like the CSL money. Not so much on steady scaled product revenue yet. That makes revenue kind of lumpy and dependent on partners, which isn't as sustainable long-term as consistent sales.
Good point. And finally, there's the technical picture. As we mentioned, the stock's been trading pretty flat lately, consolidating around that $16.80 level, near its 50-day moving average. When a stock is coiled that tightly ahead of potential big news, it means it's likely ready for a sharp move, could be up, could be down, based on the next catalyst, high volatility baked in. So pulling it all together, our analysis really points to this being best suited for long-term investment. If you're looking for a quick pop, the risks are just too high with trial results pending. The real value unlocking depends on catalysts playing out over the next, say, 6 to 18 months, clinical results, regulatory steps, commercial ramp-up.
That's a really critical distinction for anyone listening. You're essentially buying into the technology platform and the long-term execution story, not necessarily expecting a smooth ride or a quick win tomorrow. You've got that first-mover tech advantage, the cash cushion extending out to 2028, and a whole series of potential make-or-break moments coming up. So maybe the really big question for a long-term investor isn't just can they execute on the CF and OTC trials, but maybe it's more like, can they take that, say, mRNA success from Japan and scale it into the huge US and EU markets before the giants like Moderna and Pfizer catch up with their own next-gen platforms. That long-term competitive fight, that's probably the ultimate variable here.
It really is a fascinating spot for them to be, and huge potential, but massive competitive pressure looming.
Indeed. Well, we'd love to hear your thoughts on Arcturus and the whole same RNA space. Thanks for joining us for this analysis. We'll see you next time.